Good morning. Tammie, VanDeusen, Summit Lending. Certainly not going to be my fanciest video, but I wanted to shoot something to get this information out to people as soon as I could. Obviously, I'm going to talk about Trump's announcement and the fact that he directed Fannie Mae and Freddie Mac to buy $900 billion in mortgage-backed securities. What does that mean to the mortgage industry? What does that mean to the real estate industry as a whole? So overall, it's obviously good news, right? But it is not going to be a magic bullet and we're going to wake up to 3% rates. It's going to mean that we are going to have lower rates. I don't think they're going to be crazy lower. Although this morning on just the news, the bond market took off like a rocket. However, we lost everything we gained before I even made my butt into the chair at the office. So we'll see where it lands, right? And this is all before anything's even been purchased yet. Let's put this in perspective, okay? $200 billion is a lot of money. However, there are $9 trillion worth of agency bonds outstanding. So if Fannie and Freddie carry out this purchase, the $200 billion is about 2% of the market. So nonetheless, it's positive for mortgage bonds and the housing industry as a whole because it's going to drive down rates and make things a little bit more affordable. But it's not going to drop rates by like 2 or 3%, right? We might see 1/4 to 0.5% on just that alone. What I'm most excited about, though, is I think it could shorten the spread that we're seeing between the 10-year and the 30-year fixed rate. So historically, the spread is around 170 basis points. We've been as high as 300 basis points. So in other words, when the 10-year was at 5%, mortgage rates were at 8%, and that was way out of whack. Right now, we're sitting at about 200. If we get it down to that 170, we should see interest rates come below 6%, depending on what that 10-year continues to do, right? The other thing that we're seeing is oil. Mortgage rates follow oil, and as long as oil keeps going down, we should see mortgage rates continue to go down. I'm also kind of curious what the rest of President Trump's announcements are going to be and what kind of effect those are going to have on the market. I'm encouraged by the announcement that they're not going to allow big corporations to buy real estate anymore. And we saw that certainly in our area where they were buying blocks of new construction and really competing with the mom and pop investor, right? So I think it's going to let us mom and pop investors get back in the market and slow down the competition. Certainly going to help the first-time home buyer by freeing up some of that inventory. The other thing I'm kind of curious about is the GSE fees. So the GSE fees were put on loans back during the mortgage meltdown to help recover some of the cost from that. And we never got rid of them. So that's why conventional loans are a little bit higher than FHA or VA loans. Those don't have GSE fees. We've even seen the government come through and eliminate or reduce GSE fees for first-time home buyers, some things like that. That's a really low-hanging fruit for them to be able to grab onto and maybe do something with. That's not really getting talked about, so we'll see. I will keep you posted. Rates are a little bit better this morning. Nothing to shout from the rooftops about like I was excited about this morning, but hopefully we start to see that downward trend continue. I would certainly, if you're over 7%, reach out to your mortgage professional. Hopefully that's me, or if you don't have a trusted one, by all means call me, and let's talk about refinancing, because even if you've got a second mortgage or something like that, now might be a really good time to start positioning yourself to get ready. Thanks, and make it a great day.